Good morning and welcome, everyone. For those of you coming in the room, please come up. There's still a few seats up in the front, so you can get the best view. My name is Sanjeev Kalita, and I'm editor-in-chief at Money20. And I'm so excited to welcome you to Money20 this morning because it is going to be an amazing day. In addition to welcome you, I wanted to wish you all a happy Diwali. Diwali is an Indian festival celebrating the victory of good over light, of good over evil, of light over darkness, and of knowledge over ignorance. And we have a lot of knowledge on the stages today. As you know, I used to be in charge of Money20 agenda, among many other things. I've literally put together thousands of sessions with thousands of speakers around the world. But one of my favorite sessions that I've ever put together was one back in 2014 with the next speaker. He was interviewed by one of his portfolio entrepreneurs, Patrick Khosla of Stripe. And it was positively an electric, with neurons firing on stage, and it was like filling the room with knowledge. And I'm hoping we can recreate history again today. In place of Patrick, we have our very own Zach Pettit. Please welcome to the stage Vinod Koshla of Khosla Ventures and Zach Pettit of Money20. Please.
All right. How are you this morning?
I'm doing great. Hello, everybody.
How y'all doing this morning? How y'all doing this morning? We have a legend of venture capital here. Come on now. You see what I deal with, Vinod, all the time, getting energy out of these people. They need a little bit of you. So
We'll spice it up.
Well, don't worry. Pay attention. You're going to hear things you didn't probably expect. So last time you were here was 2015. One, where you been? Why haven't you been here? We missed you. And two, fill us in on what's happened since 2015. One of the few people in the world capable of doing that, I think.
Well, first you didn't invite me since then.
Okay, fair. Well, we're fixing that. We got you here now.
But look, 2010 to 2015 was the first wave of innovation we saw. You know, we invested in Square in 2010, then Stripe, then Affirm, then Fundbox, a whole bunch. And innovation happens in wave, and that was the first wave of taking old finance and making it what's called fintech today. The word wasn't much in use.
What were they calling it then? Like when you invested in Square, was it just buying stuff tech?
Yeah, it was a startup that had this small hardware dongle that plugged into your iPhone, and it didn't look consequential. Of course, it was an attempt at doing finance using tech for small business. So the larger vision was much larger than the hardware dongle seemed to be. Most of you still, who know Square, probably remember that hardware dongle. But there was a wave of innovation, and we were very lucky to invest in Square and Stripe and Affirm and Upstart and Fundbox and others. I think we are ready for the next wave of innovation. And innovation happens when technologies come together to enable a new set of services. So the cyber world has been interesting in finance. The crypto and blockchain are enabling technologies. And I think people will be surprised how enabling AI will be in this. And as these things come together, I think we'll see another large wave of innovation the next 5 years. You know, my general view is what the internet was for media, for commerce, for social and communications, and we will see that in fintech for banking, for law, and we haven't talked a lot about software contracts, and accountancy in general. And that kind of massive wave is possible if we do some things right.
So what are those things? So if it sounds like you're saying we could do a lot more, but we're not because there's blockers sitting between us and
Yes.
this future potential of this magical world?
Yes, there's massive blockers
What are they?
right now. So I divide crypto into two pieces. Crypto for the crypto world and crypto for the real world.
Okay.
And we can talk about each. So far, it's been about tokens and speculation. Right?
And that's for the crypto world.
And that's been crypto for the crypto world. Even there, we've tended to stay on the totally legal, compliant, regulatory compliant side.
Are you saying that there are cryptocurrencies that are potentially outside of compliance?
Oh, let's not go there.
Oh, okay.
Well, but I think it's worth pointing out that the recent fine on Kim Kardashian was a really healthy thing to happen.
This is what you all thought we were going to come to, right?
Right?
We all knew we were getting to Kim Kardashian eventually.
Yeah. Essentially abuses of finance, and I know you have somebody from the CFPB
yeah.
speaking. That's really important to be compliant with them, with the FTC, with the SEC. If we do that, suddenly much larger businesses become possible. And I think that's what we need to do. But the first thing is, say, abuses like promoting tokens or pump and dump schemes where certain VCs are just pumping up tokens and then selling them, not holding them. I don't mind if somebody invests and holds, but selling them soon after is a pump and dump scheme. If those abuses are stopped, I think we will be in a world where real long-term businesses can be built and will be built. And I think that's what it takes.
And so I guess you take a step deeper into it, and I guess you kind of have this fiat, like, regulate it better or regulate it stronger. But what does that mean, I guess, as you get into the practice of it? Is it more so just that we need a lot of what has existed in the centralized world to be applied in a decentralized world in terms of KYC, all these pieces?
So let's be clear. Without KYC, without identity, we can't have regulatory compliance.
I agree with you there.
Right? You want to know when somebody is a terrorist if you're in India.
Yeah.
The Indian government worries a lot about terrorism. You worry about drug smuggling or sex trafficking or pick your favorite illegal activity.
Pick your favorite.
And there's one in every part of the world. As long as you can follow them through KYC, AML, those kinds of things, I think much more will be possible with crypto. And I think that's why first we stop and penalize the abusive uses of crypto. And there are sort of valid uses. If you're in Venezuela, I think it's a valid use to have Bitcoin as a store of value for you. Or if you're frankly in China, it's a good store of value.
Going through hyperinflation.
International money transfers, those have been good uses for crypto, but it gets mixed in with a lot of illegal uses that we've tended to avoid. So we've ended up in the first generation of crypto doing companies like Anchorage, where institutions can hold crypto assets in a compliant way. We're investors in Lead Bank, and we can come back to talk about it. But once we get rid of this, we can start to build real businesses.
Yeah. So actually, let's talk about Anchorage and let's talk about Lead Bank at the same time, because you and I were talking backstage, and one of the things you were saying is that there's not really a good, I can't remember how you phrased it, but you said something along the lines of like, there's not a good digital first bank, or not a tech first bank, something along those lines. And I was actually thinking about Anchorage, right? Because as of now they have a charter, and thinking about a Lead, who you've also invested in. When you think about those, granted Anchorage is truly the crypto first bank, how do you think about the delineation there? I guess I'm just thinking about the world of banks kind of meeting in the middle and coming together. Like, what's the thesis for you?
So there's multiple things, right?
Yeah.
Anchorage was set up to be compliant enough so institutions could hold these assets.
Sure.
And that would enable better activity in the exchanges. So exchanges and what Anchorage was doing in terms of managing crypto assets for institutions was very complementary. There's another piece once you go into the mainstream world. At Square, we discovered there really wasn't a white label bank you could use that was designed for the mobile world, the internet world, essentially the new world. And what Jackie Reese, who was at Square and worked with me there, started a new bank called Lead Bank with a full banking charter. And she'll be here and speaking, so go listen to her. And it needs to be digital first, with digitally oriented services and settlements and all. The core banking system has to be very, very responsive, which is what the internet world is about. At the same time, you want to be banking compliant, which means generally identity in some form.
Yep.
And we are also investors in Worldcoin, proof of personhood. But we also want to be compatible with the crypto world and the blockchain world. And the hope is that somebody like a lead bank can be in the core banking world, an American bank that also serves the needs of the crypto community. For example, you can preserve the key requirements of the blockchain world, which is things like distributed trust, anonymity, and other things, and still do KYC ML when a regulator wants to track a transaction. That doesn't mean everybody in the world needs to know who you were. So through zero knowledge proof and things like that, I do think identity is a major area, very interesting area, where you bridge anonymity and regulatory compliance and law enforcement compliance.
Let's talk a little bit more about that, because I think there's, what you just said, to me, what I heard is that there's a rational way of thinking about Web3 and a rational way of thinking about crypto where it doesn't have to be all the way decentralized or all the way central. There's a middle ground that we can achieve, and I think identity, as you said, is kind of one of the key pieces of that. So let's go into the Worldcoin thing a little bit. One, what is Worldcoin? Two, talk a little bit more about kind of the identity problem it solves, and also Sam. Let's talk about Sam, because Sam being the one, Sam Altman is the one that is starting it, and I mean, similar to you, he could just retire any day, and he's taking gigantic swings. So, why?
Sam is taking gigantic swings, and I love working with Sam because he has the freedom to do whatever he wants instead of going sailing. He's choosing to work on really important problems. We have competing startups in Fusion. I have one. Sam has a different one. I'm in Commonwealth Fusion. He's in Helion. He's doing OpenAI. We are one of the first venture investors in OpenAI. And we are doing Worldcoin together. Worldcoin is proof of personhood, and that ties to identity. You want indelible proof of personhood no matter where a person is in the world and be able to move around. So it's physically encoding while preserving privacy. All the original data gets sort of sequestered and thrown away.
So is the delineation the international nature? Is the delineation the privacy nature? Or is it kind of all of these? I guess what I'm trying to understand is we have a KYC framework that kind of moves from country to country, not really, or an identity framework. We have passports. Is this a digital tokenized passport? Obviously not in terms of entering, but in terms of payment and whatnot.
Well, so it depends on the application.
Okay.
Some are national applications and they have to be compliant with whatever the national laws are. Some are international. You know, people aren't constrained to one country or transactions in one country. So it depends on the application. You know, gaming's an international world. Banking is typically national. So it really depends. I think you should look at Worldcoin as a platform on which many applications can be built.
So just a base layer of infrastructure providing the level of identity. So this is the fascinating thing about fintech.
Providing proof of personhood. You are Zach, and you'll always be Zach. and you can always be identified.
Can I get that clip? Warren, could you get that clip of Vinod saying that to me later? Because that's going to be, I think I'm going to have that play at my funeral. So there's a delineation between the identity and that proof of personhood, but that proof of personhood, because of what fintech is becoming, that's why this is kind of a, not confusing, but broad conversation, because it can be applied to a purchase, a financial, KYC process, but it could also be applied to crossing a border. It could be applied to all these things, right?
Yes, and it's up to every country to regulate how it uses platforms, whether it's this one or something else. You do need a digital identity for everybody. It needs to have both anonymous and recognizable KYC ML type features, but not all features should be available to everybody in the world to see what you're doing, right? That's the anonymity piece.
And at the end of the day, so that's a decentralized system working with and around a lot of centralized systems. Is there a world that we can extrapolate out in 20 years where the entire world is functioning on proof of personhood, be it on Worldcoin? With this nation states that we have?
I do think it should work on proof of personhood. What should happen doesn't always happen.
Sure.
And each country may choose to do it differently.
Yeah.
Obviously China will not do Worldcoin.
This is what I was wondering, this is kind of what I was trying to dip our toe into a little bit, is if the whole world chooses to go with proof of personhood and chooses Worldcoin, and then China says no, that's a good portion of society.
Let me mention something else most of you have probably not heard of. You've probably heard of the Aadhaar system in India, a digital identity run by the government for everybody. The person who did this, Nandan Nilekani, has kicked off another effort to make a digital public infrastructure available to every country in the world with fully open source infrastructure. So if a small country wants this infrastructure, what do? They call KPMG or somebody like that. That ties them into a vendor. So the goal here is to build an open infrastructure, whether you're talking about identity, whether you're talking about payments, whether you're talking about health records, or your personal genome. All this can be customized out of this open source effort, and these services are available from a non-profit entity building this digital public infrastructure. And it's very important for fintech, whether it's the crypto side or the blockchain side or traditional fintech, to have that. And most of these countries, most countries around the world, don't have the internal capability to build this well, and if they do, to not get locked into specific vendors and truly be open source. So I'm very, very excited about this effort.
It seems like that open source
In fact, next year, invite them to talk about the infrastructure for finance globally.
Sounds like we have a third for this conversation next year then. We'll just put them right there. We'll do that. So it seems like the open source piece of it, I kind of want to rewind a little bit to the China side of this conversation, because a lot of what you're talking about crypto for the mainstream, right? Talking about crypto for B2B, talking about how Web3 and all of this is kind of coming to a place where it can be used by those of us that aren't in our basement with Cheetos on our fingers or what, just like it's getting to the place where bankers and folks of this ilk are actually using it. Do you think that there's a way that that's actually going to be able to improve the relation between those two, between the US and China, or be able to, do you think there's any way that this invention of this kind of new financial system might actually create more peace?
I don't think so.
The opposite?
No.
Okay.
I think it's a neutral technology. It'll have a lot of capability. But what China does will be in China's interest. What we do will be in our interest. Mm-hmm. I've said publicly we will, over the next 20 years, be in a techno-economic race or war with China. Mm-hmm. And that's a good thing for the world because there's multiple parties competing with new technologies, and it doesn't matter whether it's fintech or blockchain or crypto. or fusion, or rocketry. I think a technology race is good for the planet, but people's self-interest will determine how they use what the capability that's provided. I think the platforms will open up a lot more possibility for entrepreneurs to innovate, and that's what's interesting to me.
So let's go back to that. So and one of the things that I want to, and we're getting closer to time, so I really want to hit on one thing that I think you are the expert in, which is innovating in hard times and thinking about building companies in times that maybe don't seem like the right time to build a company.
So my message to all of you entrepreneurs especially is the times may be hard, but that's a good thing. Maybe funding is a little harder to get, but if you get it, your competitors aren't going to be funded just as easily.
Right.
And not with as much money. So I think capital you raise will be used much more efficiently than it would have been 3 years ago, where every company had 5 competitors, all overfunded, all trying to kill each other. I used to call it startup fratricide. Startups trying to kill each other. I do think the opportunity exists. The other perspective I'll give you is if you're starting today with a new startup, the current environment won't be the environment in 2030, and that's only 7-8 years away. And what you care about is, one, surviving till 2030, but it gives you much more time to take the long view and build more substantial companies. So I actually think the hardship will result in people taking a longer view and building more substantial companies. Take one of my favorite examples of a token company is Helium. I don't know how many people know Helium, but they've used a token to build a real utility network. And next, they're trying to build a 5G operator. If you can do that with tokens, that's a really great use of tokens.
Talk about the hardware piece a little bit more, though, because I think that's something that probably the average person is not thinking about or understanding.
So AT&T owns all the nodes that in their network. It's very centralized.
Right. And those are those towers, basically? Or I guess a node in a tower is different.
In the first network Helium's built, which is a low bandwidth network, these are access points in people's home that also have a network called the LoRa network. I won't get into the details.
Yeah, we don't have to go down that.
Right?
Yeah.
But that hardware piece lets me at home, and there's millions of people who've ordered these, sitting at home with access points that enable a citywide network in most cities in the US and many international cities. So a network can be built with very low capex because of the tokenized nature of contributions.
Yeah.
And because of that, they can offer much lower price, more accessible service. If you have an environmental or a weather sensor at home, if it's pennies a month, you'll put it on the network and it'll be live. If it's dollars a month, most sensors won't ever make it into the network. But it's exciting if you could do the same thing with 5G.
Yeah. It's an interesting...
So tokens have real uses.
Yeah. That's what I was trying to drive towards. Yes, exactly. Use cases.
What Helium has done is created a network effect. And many media companies also created network effects and locked people in. HypeMapper is another example of a company building a network effect with an open source approach. No single entity controlling the maps they're trying to build to compete with the various Google, Apple maps.
Yeah.
Right? So there are really good uses for the blockchain. But we gotta say, what are those and where do they affect large functions of everyday life? And that's in banking, it's lending, it's borrowing, it's mortgages. All these things can be addressed. All of insurance, all these can be addressed with blockchains very, very effectively by reducing the labor content, making them smoother and faster, and decentralizing them so you don't need a central authority.
Yeah.
You know, for payment rails, why should you have to go through centralized institutions?
Well, the MasterCard employees in the crowd would have a very specific answer for you, but at the end of the day, I don't have a philosophical one.
So I'm excited about all the possibilities and what all these entrepreneurs here are doing. So
it seems like the blockchain and this idea of this Web3 thing it's expanding so far beyond fintech that it's getting to a point where, I mean, we just spent, I think, like 3 minutes talking about telecommunications, right? I mean, it's fascinating the way that it's expanding, and like it seems like the next, this is what you need to write, is the fintech is eating the
let me
world.
give you a very specific example.
Sure.
You put your money in a Bank of America, and a big part of their profits is mortgage lending. Now, why shouldn't you put money on the blockchain into mortgage formation if the other pieces can be handled effectively? You wouldn't have the Wells Fargo scandal we had that killed, set the world back in 2008. And so, could mortgage formation be done differently? Capital formation be done differently? Yes, if you prevent abuses. And frankly, it's on the regulators to clarify the rules. The regulators have done a poor job of saying, here's the set of rules. And I think people are working on it, and hopefully you'll hear something more about that. But clear rules on what you can't do from a consumer protection point of view, from a banking, SEC trading point of view. The sooner it becomes clear, the sooner all these things become real.
Yeah. So this sounds like kind of, and the thing I want to close on is what drives you. And it sounds like what drives you is this. What drives you is like knocking down these barriers and making this innovation happen. But what is it that gets you out of bed every day when you could be skiing?
I could be skiing. Look, it's really fun to work on hard problems. And it's even more fun when those hard problems and cool technologies have large social impact.
Yeah.
So we work on very hard problems, whether it's fusion or we're working on a Mark V aircraft so we can do London to New York in 90 minutes, and working on mortgages and insurance and all these things that have intermediaries that extract taxes of one sort or another and control things. That's what's exciting. And no matter whether you look in fintech, traditional fintech, where there's a lot of opportunities. Even is the new HELOC credit card we've done, very exciting, to deep medicine.
Yeah. Now I feel out of all those, between nuclear fusion and everything else, I feel like being the one asking you the fintech questions is a little less interesting. But next time we're going to talk a little bit more about nuclear fusion.
Well, let me throw a challenge out. Something in fintech that's bothered me a lot. You look at the Goldmans and the JP Morgans and the Morgan Stanleys. The fintech industry is in the business of serving other businesses. Mm-hmm. Whether you're a manufacturing business in Ohio or an agriculture business in Iowa, fintech is the business of servicing all these. But they make more profit than any of these. Probably someplace north of 15% of all corporate profits come from fintech. That seems like a shame. If they're in the business of servicing other industries, they shouldn't be making more profit than all those businesses. And that's because they've centralized and monopolized these businesses. So the challenge to all of you entrepreneurs is cut the profits of the fintech industry from more than 15% of all corporate profits to less than 5% and own 4% or 80% of that piece. That's the challenge.
Challenge, I think, accepted, and a lot of people are going to go do some math and open up some spreadsheets.
Yeah, and that's in DeFi, that's in Web3, it's in media of all sorts. Lots of opportunity.
It's time to redistribute. Thank you, Vinod. All right, we're out of time.
Thank you, everybody.
Thank you to Vinod Koshla. Round of applause for the man.